Good morning and welcome to this Money Control live stream, a brand new edition of Opening Bell. Of course, the cues are looking fairly positive this morning. I'm Nandita Khemka, and over the next 1 hour, I beg your pardon, I will be taking you through all the market cues, the market action, and of course, some Diwali picks to watch out for. Lots of stocks in focus. We'll be focusing in on those as well, and all your stock-related queries will also be taken up. So keep them coming in. On our live feed, we'll try and take them up. But all in all, the cues are fairly strong this morning. The GIFT Nifty, we did see them turning buyers last week as well, and no big buying figure, but still 68 crore rupee worth of stocks bought in the cash market. When it comes to foreign investors, DI buying support continues. 4,600 crore rupee worth of equities bought in the cash market. Two new listings today, Rubicon Research and Canara Robeco. So keep an eye out for that. 10 a.m. is when they list on the bourses. But there's another positive cue that I haven't mentioned, and that's the fact that Trump, in a press conference, has said that PM Modi has told him that India, will stop buying Russian oil. So, we need to watch out for, the developments on this front, because this was one of the biggest bone of contention between India and US. And, with these kind of statements coming in from Trump, looks like we are closer to a trade deal with the US. So, yes, this comment and, of course, this entire thing will be in focus today as well. But on that note, let me bring on board our guest for today. Joining me is Ajit Mishra, Senior VP, Religare Broking. Lovely chatting with you, Ajit. Looks like the festivities are back on Dalal Street. Bulls are back in the festive mode. We are around about the 25,350 mark. What is the possibility that we could, head into the Muhurat session with 25,500 on the charts, which also happens to be the swing high of September? What are your thoughts?
Yeah, good morning, Nanta. And first of all, festive greetings to you, entire team, and all the viewers. And as you rightly mentioned, that finally, like after almost 1 year of gestation, finally we are seeing some sustained traction. Though we are still not completely out and out seeing a positive momentum in the market. But yes, the key sectors, banking and IT, they have stabilized. Now we are seeing that private banking majors, which were sitting on the sidelines, they have started participating. IT majors, before the numbers, they have started seeing some traction, and the other sector anyways, they were doing well, be it auto, metals, PSU banks, some of these defense names and all. Broader markets, we are seeing overall strong picture. So we believe that finally again we are going to attempt this trend and hurdle at 25,450 maybe in a day or two. The moment we cross this hurdle, then probably this June-July high close to around 25,670, 680 is something that the market is going to attempt, and maybe inch higher towards the record highs as well. So as of now, the tone looks positive, and one should continue with buy on dips approach until we decisively break the 20 EMA mark, which is close to around 25,050 area. Banking is leading from the front, so we expect gradually but steadily that it might inch towards record highs as well. So 57,700 is what we are eyeing positionally. So with the immediate support at 56,500, 56,000 zone, where one can look to accumulate in case if there will be any dip.
That's true. Bank Nifty, of course, also could retest record levels. But just looking at the rates in the pre-open, we are closer to that 25,400 mark in the pre-open at least. And you can see Axis Bank, top Nifty gainer. Of course, this is just the pre-open session, but still it's showing gains of 4%. Numbers came out yesterday. I want to quickly take you through what they really look like. Profit was down 27%. Of course, that has missed expectations, but that was largely on account of a one-time hit, a one-time drag, a one-time provision that the company has made. So because of that, we saw profit dipping so much, 27%. Net interest income rose 2%. That's slightly above estimates as well. But the good thing is that the asset quality has improved on a quarter-on-quarter basis. Slippages as well on a quarter-on-quarter basis has come down quite meaningfully. They've made an additional one-time standard asset provision of 1231 crore rupee during the quarter for two discounted crop loan variants. And even though I was going through some of these brokerage notes, the mood is fairly bullish on Axis. In fact, Bernstein has an outperform call, and the target price is at 1250 or thereabouts. And they've said that lower slippages and rising card additions indicate that the stress may be bottoming out for Axis Bank. The stock is somewhere around 12.16 or thereabouts, going by what the pre-open rates are throwing up. But, Axis Bank, what would be the nearest level to watch out for here on the upside now?
So Axis, in fact, Axis and Kotak both were doing well, while HDFC and ICICI were sitting on the sidelines. So means from 1,040 levels to 1220 means closer to the previous swing high, something that the stock has already tested. We were seeing a bit of a profit taking ahead of the numbers, and we are still holding above the short-term averages. So this gives us comfort. And as you've rightly mentioned, that in the pre-open, it's indicating roughly around 4% kind of an uptick. So the moment we cross 1240, then probably 1280 or maybe gradually towards the record high 1350 area is something that the bank might attempt. So as of now, one should definitely stay put. The immediate support is at 1150 and the major support exists around 1120 mark. So with that as a stop loss, one can continue to hold the longs. They can in fact look for fresh long positions the moment we cross 1220 mark.
Okay, that's the view on an Axis Bank. But let's also talk about RBL Bank. Of course, the stock has been in news, but yesterday it was a Moneycontrol exclusive, and we reported that the bank will be considering a fundraise proposal on the 18th of October. The announcement comes in the backdrop of ongoing advanced negotiations with Middle East banking powerhouse Emirates NBD to potentially cede a controlling stake. On the 30th of October, we had, in fact, we were the first to report that Emirates NBD had entered final leg of discussions to acquire a majority stake in the lender, and of course, in a mega proposed transactions, which could in fact also open trigger an open offer. The Moneycontrol report had mentioned that the route of preferential issue of shares is likely to be used for the deal, which would be subject to RBI approval as well. And if this deal or transaction goes through, it would be one of the biggest banking sector M&As in India Inc. Of course, it also underscores the rising interest of overseas financial services majors in Indian assets. But RBL Bank, the stock has spent a lot of time in the F&O ban in the last 3 to 4 months. Despite that, the stock has done well, steady performer it has been. 6 months, we've seen a 65% up move. Is it closer to hitting, the floor on the higher side or the ceiling, so to say, on the higher side? What are your thoughts, and do you see more upside?
Yes, Nanta, means the stock has had volatile swings in past. Means it was usually that every time we used to see tech sellers used to become active and they push the stock lower. This time around, we are seeing a different trend. Means on every dip, there is a buying interest emerging. It seems like a trend reversal after a prolonged underperformance. And this time around, another important aspect is that we are crossing the year high, the calendar year high as well now. So this gives us comfort that yes, probably this momentum is here to stay. And with 275 as the immediate base, one can continue to hold the longs. One can look for, in fact, fresh long positions also. Gradually around 340, 360 is something that the stock might attempt. The risk reward is favorable. One can continue to look to accumulate the stock until we decisively break this 275 mark.
Okay, 340, 345, that's the level to watch out for on an RBL Bank. And of course, even now the risk reward ratio is looking favorable. But just about 2 minutes to go for the markets to open. Any recommendations, Ajit, for the next couple of days? I'll talk about the more trading picks later, but just for this week, any recommendations?
Yeah, so apart from banking, the financial space is also buzzing, and Chola Finance, after this recent consolidation, made a remarkable move, and we anticipate this positive momentum to further strengthen. And in the near future, 1820 is what we are eyeing as an immediate target. So with stop at 1635, one can accumulate Chola at current levels. Then we have L&T, a steady performer from the capital goods space. Post this consolidation range breakout, the stock has been gradually inching higher. And we expect this stock to inch towards record highs in the near future. So 3690 should be a stop for the existing position. You can buy fresh also. And 4080 is what we are eyeing positionally.
Okay, Chola Finance and L&T, two recommendations coming in from Ajit. With that, just I think less than a minute to go for the markets to open, and we are seeing some bit of traction, in the pre-open at least. But looking at the open, HDFC Life, I want to get in your thoughts on that. Ajit, that's down over 4%. Numbers came out post market hours. How are you looking at the charts, and what would your positioning be here?
So, see, before, yesterday we were seeing a bit of a consolidation. It was an uptick yesterday, and today we are seeing that the pressure is emerging at higher end. Means we are testing the 200 EMA, the long-term averages today. So it's important for the short-term traders that 730 on the closing basis, at least the stock should hold. Otherwise, we may see some further profit taking, but overall the trend looks positive. So for those who are looking for investment opportunity, they can look to utilize this decline for the same. But short term, yes, it might consolidate in this range of around 720 to 760.
Okay, consolidation expected in the range of 720 to 760, but you can look at accumulating or buying on dips. That's about life insurers, but what about IT? What were you doing with IT stocks last week, because they saw a good pop, but this week hasn't been all that great for IT. And today, of course, Infosys numbers come out, and Persistent came out earlier this week, and they were solid numbers. How would you be positioned in some of these frontline names like TCS, Infosys, vis-a-vis a Persistent and Coforge?
That's right. So in fact, Nanta, I feel that in case if we manage to sustain at current levels, because last week, if you remember, we were roughly around 5% up on the IT index. And with the beginning of the earning season, we are seeing bit of a muted, start or muted session. But the tone looks positive, and like what you rightly mentioned, that yesterday it was Persistent from the mid cap IT name, wherein we were seeing traction. Large cap, they are trading bit of the cautious bias, because we have not seen a majority of the stock decisively crossing their immediate hurdle of short term averages. So for Infosys specifically, before the numbers, we are seeing very lackluster move within this very narrow range, close to around 1400 to 1550 is what the stock has been consolidating for almost a month. So it's important, the moment we cross, let's say 1500, 1550 decisively, then we can see some strong action towards, let's say 1650 to 1750 area. So as of now, consolidation is more likely in the IT pack, and there's no complaint, as long as the banking is doing all the lifting and IT stays stable.
Okay, that's the view on IT. We had a couple of queries on IT. Naveen wanted to know on Coforge versus Persistence. I think you have already, answered that query. But, let's talk about Eternal as well. Numbers are coming out today. The stock, of course, has been doing extremely well. In fact, the entire New Age basket has been doing well, around those new highs as well on Eternal. Just taking you through what the estimates are. The revenue is expected to jump 66%. Margins, however, are seen lower at 3.2% vis-a-vis 4.7%. And profit could slip somewhere around 21% or thereabouts. The gross order value for the food delivery business is expected to grow 18 to 19% on a year-on-year basis. For Blinkit, gross order value growth likely to be strong at 130 to 140% on a year-on-year basis. What are the levels you'll watch out for here? Poised to clock that 400 level anytime soon?
So yes, possibly yes, because the way we are seeing that on every dip closer to the first line of defense, that the 20 EMA mark, the stock witnesses strong traction. And in fact, this time around, the consolidation was slightly more on the positive side. Means we were seeing more of time-wise correction in last 3-4 trading session, and then followed by this up move, which is helping the stock to inch towards the record highs with every passing day. So, but yes, at the same time, since the stock looks slightly overbought to me, so there could be a bit of a profit taking at the higher end. So from the trading point of view, 340, 42 is something that should act as a strong support in case if there will be any profit taking. But that should be a stop loss in case if you have any existing position and you're planning this trade to carry for the earnings as well. But overall tone looks positive, and gradually, yes, there's a possibility that the stock might inch toward 400 plus mark also.
Okay, that's the view on an Eternal. But I want to talk about an MCX as well. This stock has been on a tear in the last 1 month. Today, of course, it is taking a bit of a breather. I have a query on this stock from Nana Prakasam, and I think he holds 50 shares and his buy price is 8,745. He wants to know whether he should hold or book profits. Please suggest. He is sitting on good amount of profit, but should he wait or book partially here?
Right. So, Ananta, I guess he's playing a proxy play to what we are seeing in the bullion markets, means the gold, silver. Like, we are seeing unprecedented rise, and that's reflecting in MCX price as well. So, after almost like 3-4 months of consolidation, the stock has reclaimed the record highs, and the way we have witnessed a breakout with strong volumes, gradually we anticipate the stock to inch toward 10,400 mark. So he's already sitting in decent profit. Now his trailing stop loss should be at 9,000 mark, and he should keep on trailing the stop loss on every 3 to 4% kind of an up move. So hold as of now with 9,000 as a stop loss and 10,400, 500 as a positional target.
Okay, I'll just ask you your thoughts on gold in just a bit, but there is another stock that's been in news, and that's IEX. Of course, there's some news of insider trading here, and the stock has also been in a downtrend, so to say. Today it's trading with a mildly positive bend, but the stock has been in a downtrend, so to say. Last 6 months, it has shaved off almost 30%. How would you look at this particular stock, IEX, from the exchange pocket?
Yeah, so basically we all know that post this news of that the stock might not manage to continue with its monopoly, and since then we are seeing that this negative bias or on every uptick we see that the seller emerges, especially around 140-45 mark. And in case if it fails to hold this recent swing low close to around 130 mark, probably we can retest the major support area around 120. So the overall texture looks negative. In case if you have any existing position, prudent approach is to maintain a strict stop at 130 and utilize any rebound towards 140-45 mark to exit your longs, and completely avoid in case if you're planning any fresh bet.
Completely avoid for any kind of fresh bet on an IEX. But moving on to some other queries, then there's a query that has come in from Aisha, and she wants to know your thoughts on an ITDC. She holds 76 shares at the rate of 757. Wants to know if she should average at these levels. Looking at the chart of an ITDC, today it's up somewhere around 4%, and the stock has seen some kind of traction in the last 5 sessions. It hasn't really gone anywhere. If you see the last month or so, it has been fairly sideways. 638 is where it's at, and her buy price is 757. She is, of course, in a bit of a loss here. Should she average, or what should she do?
So Nanta, this stock usually see very negligible volumes, but off late in few up days we were seeing that the stock managed to post roughly around 10 times of the average volume. So we have had multiple occasions where the stock inched roughly around 8 to 10% in a single day. So I would recommend her to utilize any rebound to exit longs around this 720, 750 area, this buying price. Because overall, if you see that this stock is extremely volatile, and in case if you are not okay with 8%, 10% kind of a stop losses, the prudent approach to avoid such stocks. So as of now, 600, 610 is the area where we have the immediate base, and 720 with the stock recently tested as the immediate hurdle. First, it might take a breather around that area, and then probably around her buying price. So utilize any recovery. Don't add fresh or average down to your existing position, but you may continue to hold with 610 as a stop loss.
Okay, that's the call on ITDC. Hope that answers your query. I want to get in your thoughts on some of these real estate stocks. Even today, I think the real estate pack is leading from the front. Yesterday as well, it was among the top gainers. Today, we have Ubera Realty reacting to numbers. The stock is up almost 4%. Anything that you like within the real estate space?
So yes, Prestige and Phoenix is something that one can look at, because the way we were seeing that while the realty counters were witnessing profit taking, they continue to hold their major averages, long-term averages. And the moment we saw a rebound, they were among the top names which witnessed strong traction with volumes. So for Prestige, we believe that closer to around 1800, 1820 is something that the stock might test in the near future. So with stop at 1630, one can accumulate Prestige. And for Phoenix Mills, closer to around this current area 1660 is something that one can look for fresh long positions, and gradually around 1825 to 1850 is something that stock might test. So with stop at 1620, Phoenix Mills is also something that one can look to accumulate.
All right, Prestige and Phoenix looking attractive from the real estate basket. But since it's the festive season, I want to take up a query that has come in on the hotel space. This one's coming in from Geetu Sandesh. Wants to know ITC hotels or Indian hotels, which is a better buy? We had a couple of brokerages who had pointed out that Indian hotels is a good Samvat 2082 pick. Of course, it is a leader in its space, right, in the hotel space. But chartically, if one were to ask you, select between ITC and Indian hotels, which one would you pick?
So Indian Hotel, yes, it's among the top names within this space. But off late, we have started seeing bit of a profit taking or sideways trend. The stock is trading below the major averages, long-term averages, which is not a good sign. So for short term, let's say if the view is less than a month, I would rather prefer lemon tree, within this space wherein we are seeing steady traction on every day. For Indian Hotel, I would prefer that the stock sustains above 760 mark for a day or two. Then only one can look for fresh long position. ITC hotels, on the other hand, we are seeing gradual recovery after retesting the long-term averages. But we have a strong hurdle around 220, 225 mark. So risk reward is not favorable at current levels.
Okay, that's the view. And Lemon Tree, in fact, is looking, is poised much better when it compares to these two names on the charts. But there's another query that's come in from Anandru Bandyopadhyay on an Intellect Design. Wants to know where is the stock headed from here. The stock did see good traction in the last 6 months, but it lost its way. If you look at the last 2-3 weeks or so, we've seen the stock come off quite a bit. How would you look at this stock now? It's sub 1000, which is the direction it could take here on.
Yeah, so it's more of time-wise correction. Yes, it's slightly volatile these days, but overall we are still maintaining our the long-term averages, which is a good sign. And since we have started seeing strong traction, especially in select mid-cap name post numbers, we may see the rub-off in Intellect also in days to come. So closer to around 1120, 1130 is something that the stock might attempt. So with 950 as a closing stop loss, one can continue to stay put.
Okay, stay put with 950 as the crucial level. Couple of more queries to go then, last few of them. There's one query on Scient Tech and OFSS from Debu K. What are your thoughts on these two charts?
So Scient, in fact, is gradually drifting lower. We are very close to the previous swing low. In fact, the 52 weeks low, close to around 1070. In case if it fails to hold this level, probably we are set for the next leg of down move. So 1070 strictly should be your stop loss debouquet. And in case if we see any bounce, 1200, 1250 means on every 50 points kind of an uptake, there is a resistance. So utilize any recovery to reduce your position. And what was the other stock, Nanta?
OFSS, Oracle Finance.
Oracle Finance. So this stock was in news, of late when the parent company witnessed strong traction, and now we are seeing again this move has fizzled out. But it's more of again a consolidation similar to what we were seeing in Intellect. So 9500, 8250 is broadly the range that it's currently hovering in. Of late, the stock has inching towards its long-term moving averages. So there is a possibility of further consolidation. So short-term bias looks sideways to us until we decisively reclaim 9500 mark. I doubt that we can see any strong momentum in days to come.
Okay, that's a view on Oracle Finance. The last query for the day then. This one's coming in from Pooja Khanna on Varun Beverages. She's been holding it at 477. Is it a good time to average or shall I exit? Stock is at 451. She's making a bit of a loss here, and the stock has really not been able to gather so much fizz, so to say. Although the returns over the last 5 days are positive, but no convincing move, so to say. What should she do?
So that's true. Means we have this habit of seeing foreign beverages around the record highs. So after this, decline beginning this year, the stock has been struggling for any sustained rebound. And as you rightly mentioned, that we are still struggling closer to the 52 weeks low. Uh, Possibly a rebound is likely considering the stock is trying to claim its short-term averages. So her buying price may be close to around 470, something that stock might test in the near future. So yes, she can continue to stay put with 440 as a stop loss, and around 470 she should review her position.
All right, that's the view on Varun Beverages. Hope that answers your query. But with that, we've come to the end of the query segment. Before I let you go, Ajit, I want to get in your thoughts on gold and silver as to where they are headed, because we've seen a phenomenal run. In fact, gold continues to hit record highs on a daily basis. Do you see more upside, or do you think now it's time for some reversal to kick in? And secondly, I want to also know what your Mahura trading picks would be.
Right. So, Ananta, we have released, 5 stocks to invest in for this somewhat Reliance Industries, SDFC Life, Power Finance Corporation, Mahindra and Mahindra Financial Services, and Nuvoco Vista, with the average return of roughly around 15 to 16%. So, one can definitely look to invest in these quality names for the 1 year of kind of investment perspective. Gold and silver, obviously, because if you see last 10 years of his history, only 1 year in Namita we had negative return. That is in 2021. The rest of the time, gold has posted strong returns, and this year it is 65% so far that we have already seen gold. So it's a phenomenal run in the bullion, including silver. And we believe that there could be some consolidation, some profit taking. So don't get carried away with the kind of returns, because we receive query every day in, day out that should we invest heavily into gold and silver now. So the proper approach is now to invest through staggered positions, through SIP route in the ETFs, in case if we are planning to diversify. So gold is still a hedge, means yes, we have seen phenomenal returns, but usually this in the long term, this returns average out, we don't expect this kind of return to continue for in the coming year as well. But yeah, the tone looks positive in case if we get any dip, as we have mentioned in our report, closer to around 1,14,000, 1,19,000. That's the zone basically where one can look for fresh long positions with 1,35,000, 1,42,000 as a position targets.
All right, that's about gold. Yes, phenomenal run. In fact, it has outshone equities by leaps and bounds as well. Don't get carried away, of course. That's the advice coming in. It's very, very easy to get carried away. Super cycle, so to say, when it comes to both silver and gold. But it's very, very important not to really get carried away. With that, Ajit, would like to thank you for taking out time and joining in, sharing your thoughts, helping our viewers navigate their stock-related queries. It's always a pleasure. I wish you and your entire team and your family a very, very happy Diwali. Very prosperous and bright Samvat 2082 as well. And I look forward to interacting again next week after Diwali as well.
Certainly, Nenta. Thank you. Thanks a lot, and wish you the same to you and to your team.
Thanks a lot. Well, with that, looking at the market, we are past that 25,400 mark. In fact, we are very close to the 25,450 level as well.